So this video is all about Fed FOMC meeting, what happened in December FOMC meeting and what will happen in next FOMC meeting and how you can trade that information as a beginner trader. First of all, this signal number 5.1, this is the peak rate given by Fed for next year 2023. That's mean maximum they can go. The biggest fear was, you know, Bullard said that terminal rate can go up to 7%, but we are not there, not even 6%. So Fed giving signal only about 5.1. So that was the most important thing. And they are saying 5.1% till end of the year 2023. And if we see another thing which is important, Fed dot plot. These are just dots and position of these dots up and down can change entire financial market. So this is your current interest rate between 4.25 and 450 where all the FOMC member agree. And for the next year you can see maximum they are going 575, but not all the FOMC member but few, but majority of them are near 5% and 525. And most important thing, for longer run they are saying near 2.5%. So they are saying maximum interest rate in 2023 can go from 5.5 to 5.75, but they give signal with different matter. An important thing is longer run, so that will be interest rate next year till end of the year 2023. And if we go to FOMC calendar, this is your FOMC meeting for next year 2023. The main thing is summary of economic projection we will get in March, then June, then September. So everything depends what will happen in March FOMC meeting. Right now Fed is giving signal for 25 basis point rate hike in Feb, but real possibility is that there can be again 50 then 25 in March, or second possibility is 25 in Feb then again 25 in March, or most obvious possibility that 25 in Feb then no rate hike in March. And if that happen, then we will have several FOMC meeting, then there will be no rate hike which we call Fed pause. Then rate cut will start, and based on current market information which can happen in December FOMC meeting next year. So summary of economic projection we will get in March, but before that FOMC meeting we will get NFP number 3 times and CPI number and ISM manufacturing number. So these three sets of economic indicator we will get 3 times before March FOMC meeting. So all the investors know when we reach till March FOMC meeting these things together will come down and NFP can go below 100k till that time, and CPI can go up to 6.5% till that time. So everything depends what will happen in March FOMC meeting and where this economic indicator goes before that FOMC meeting, and Fed has made clear everything. But in March, one thing is clear, we will get last rate hike. And again, question is that will be 50 or 25. But March will be last rate hike. So right now, maximum of investors are expecting 25 basis point rate hike in Feb FOMC meeting. So if this economic indicator keep going down, that possibility will increase. So in March we either have 25 or no rate hike. But important thing is interest rate is now above 4%, and what is special about that number you have to understand. If you want to learn everything about forex trading and financial market, then read all the books of James Ricard, because he explained what is special about 4% interest rate, because this was their goal. They tried last time, they failed, but this time they have achieved that goal, and he successfully predicted 4% interest rate. And if you do not have time to read all of these books, then you can understand that game of 4% interest rate by this chart from FX Street. First, you have to understand what is happened in 2023. Fed want to control inflation by creating a recession. And last recession came after 2007 market crash. And before market crash, before recession start, the interest rate was 5.25. So don't listen what other people are saying, but maximum Fed interest rate can go up to 5.25. They will not go beyond that level. And this was their rate before coronavirus when they start hiking interest rate. But before that, recession was already started, and coronavirus lockdown converted that recession into depression. So what will happen 2023, 24 and 25, next 3 years? They will repeat that strategy once again, because there will be a recession. But if recession is under control, that is one thing, they will cut interest rate and will go back to 2.5, and everybody know that that will happen in 2024, not 2023. Or if inflation become out of control, that will happen, then they already know, they have all the experience. Then last time they have 5% interest rate, they cut back to 0%, then started QE, and that recession was great recession that almost killed US economy and global economy. So they have backup plan. If thing becomes out of control, then their first backup plan is go to 0% interest rate, then in the last starting QE monetary policy, and they are going to repeat that strategy once again. That is why terminal rate will be 525, but right now Fed is saying 5.1%. Or if they start cutting interest rate before things become out of control, like Alan Greenspan did many times in history, then in 2024 they will cut interest rate up to 2.5%, then they will hike again, because China lockdown are over, and China will demand for more and more commodity, that will only increase, and that will again increase inflation. So before inflation go back to 2%, deep recession will already started. Since this is stagflation cycle, so interest rate will be something like this, down up until this crisis over, because this was normal recession boom and bust cycle, but this is stagflation cycle. Then to save economy they will cut, but after economy recover they will start hiking again, because most of the investor are predicting 4% inflation rate. Inflation will not go below that number. So you as a beginner trader for 2023 till March FOMC meeting, listen carefully what FOMC members say. This is their maximum target where interest rate can go from this level, and when rate cut will start, 2.5 will be their target. They will not go up to 0% interest rate this time, because if they do, then inflation will convert into hyperinflation. If you see as technical, then this is your resistance and this is your support. And if you want instant information about everything, then you can see 2-year yield chart, and it has already peaked at 4.75, and when 2-year bond yield go below current Fed interest rate, that will be rate cut, because right now rate cut is not priced in. And once the this yield go below Fed interest rate, then you can see live that rate cut speculation has been started. But again, most important thing is this chart. This is your last recession and this is your stagflation. The maximum interest rate can go up to 5.25, repeating same strategy of last recession if things become out of control, and when they will cut they will go maximum 2.5, and maximum we have 100 basis point rate hike from current level. So when FOMC members change their tone, you can verify that market reaction on this 2-year yield chart, because if it goes up, that's mean more rate hike is coming, and if it goes below current interest rate, that's mean rate cut speculation has been started.